Hello, everyone. We're going to get started in just a moment. Hi, everyone, and welcome to the CLRC's presentation, Cancer and COVID Legal and Financial Resources. Although I'm a lawyer, today's presentation is not legal advice. The presentation also does not establish an attorney-client relationship. So let's get started. What is the CLRC? This is the Cancer Legal Resource Center, and we're a program of the Disability Rights Legal Center. We're based in Los Angeles, but we help people across the country. We're an educational model, and we do intakes in English and Spanish, and also have a language line for speakers of other languages. All of our services are confidential. I'm going to do my best to leave time for questions at the end of the webinar. And actually, this webinar is being recorded, but when I take questions, I will stop record. But hopefully, I will be able to answer your questions. If I'm not sure, or if you have questions that come up down the road, this is the best way to get in touch with us, either filling out an intake on our website or calling our toll-free number to leave a message for someone to call you back to complete an intake. And hopefully you'll be able to ask your questions in the chat and I will get to them at the end. All of the information we provide is free, though we do not provide legal advice or direct representation. The CLRC also maintains a library of fact sheets on a variety of cancer-related legal issues on our website, including a resource called our Patient Legal Handbook. The handbook provides a brief overview of many of the most common issues and questions that people living with cancer and their families have. And so we'd like to give a special thanks to American Cancer Society and Breakaway from Cancer. If you're interested in receiving a large number of copies of our handbook, please submit a bulk order on our website. We also have PDFs of the handbook in English and Spanish to download for free. So let's move into the presentation. We're going to cover financial and legal resources in connection with the COVID-19 pandemic, but let's just first get the basics covered. So obviously, cancer is an extremely expensive illness, even for those who have what's considered good health insurance coverage. So one thing that you may have heard is the term financial toxicity, and there might be a little bit of confusion around that term. So I just wanted to make sure that we get that information out there, that essentially it means financial distress or problems that affect people with cancer due to the cost of treatment. So because cancer treatment affects a patient's ability to work and pay bills, financial toxicity is often caused by a loss of income. So even the best insurance doesn't cover 100% of the costs. So having a good job with good insurance doesn't always prevent financial burdens or toxicity. So this is especially true when you take into account transportation, parking, potentially housing, and other hidden or indirect costs. And it can be difficult to get coverage for those costs, even with the best insurance plans. This issue has especially become heightened during the COVID-19 pandemic. And essentially, people might have additional challenges related to work or losing health insurance in some way if they've lost their job. So it is definitely important to go over these resources to help people feel empowered during this time of COVID-19. So it has definitely not made things easier for people with cancer. Now, the cost of cancer, as we discussed, it's one of the most expensive conditions, and most people will have some or a lot of out-of-pocket costs. Prescription drugs for cancer are often more expensive than those for other conditions. People have to take time off from work for treatment and recovery, and family members might have to take time off as well. So in a moment, I'm going to go over some COVID-19 resources, and they might, even though they're not exclusively reserved for those affected by cancer, they may be relevant in terms of taking time off or other strains that someone with cancer may have. So I think it's really important to understand the landscape and what is there during this time, but also what resources have been there before and what will be around, even if these provisions that are slated to expire do end up expiring. So let's get into it. COVID-19's financial impact. Let's talk about the resources such as the Family First Coronavirus Response Act, or FFCRA. This law applies from April 1st. It's already been around for some time and is, of the date of this recording, expected to expire at the end of the year. So it only applies to employers who employ fewer than 500 employees, and it's only limited to this COVID-19 pandemic. It provides paid leave for employees affected by COVID-19 if those employees are unable to work or telework. So unlike the regular Family Medical Leave Act, or FMLA, which we're actually going to cover a little bit later in this presentation, which requires someone to have worked for at least 12 months and worked for at least 1,250 hours in those last 12 months, employees are eligible for the Emergency Paid Sick Leave Act, or EPSLA, if they've worked at least 30 calendar days. So it greatly shortens the time that someone has to work at their job. This provides for 2 weeks, meaning 80 hours of paid sick time at the employer's full regular rate of pay, but of course there are dollar caps to that amount. If the employee is furloughed or laid off, they are not entitled to paid leave. So it is important to be aware of that. And also there is also care for others that there are also 2 weeks of paid sick time for 2/3 pay if the leave is due to caring for others. So a sick or quarantined family member, or a child whose school is closed or whose child care provider is unavailable due to COVID-19. Businesses with fewer than 50 employees may be exempt, however. And also, if someone has used up their EPSLA leave, the Emergency Family Leave Expansion Act goes even broader. It gives an additional 10 weeks paid sick time at 2/3 pay if the leave is due to caring for a child whose school is closed. So as you can see, there are additional resources out there. And the Coronavirus Aid, Relief, and Economic Security Act, or CARES Act, was signed into law in March, so it's been around for some time. It is also slated to expire at the end of the year in terms of the Pandemic Unemployment Emergency Compensation, which provides an additional 13 weeks of unemployment for those who have exhausted benefits. So there are additional opportunities to receive assistance during this time, and it certainly can be especially effective for someone with cancer. Just to summarize, this is a longer list, but to give you a sense, you may have received what's been called as the stimulus payments. Those have already been issued. You may have heard of these in the news, as well as the eviction moratorium that expired, as well as the mortgage relief has not expired yet, and that would involve that lenders may not foreclose until at least December 31st, 2020. And as we'll discuss later in this presentation about prioritizing expenses, whereas before there might have been a different calculus, and we're not advocating that someone does not pay, but there are certain times where, especially during COVID, you may need to prioritize expenses, and the additional relief provided for people might help and factor into that calculus. As well as there has been some credit card relief provided, major credit card companies offering help with bills. And for utilities, many states have also imposed moratoriums on utility termination of service. So this isn't all the resources out there, but this is a list that covers the major ones. And as you have noticed, there are some that are expected to expire, but on August 8th, the President of the United States issued an executive order and memoranda to provide additional relief for those displaced by COVID-19. It's not really clear if or when these initiatives will be implemented, but there is something called the Lost Wages Assistance Program, which would provide additional money a week for those receiving unemployment benefits of at least $100 a week, and it's supposed to expire on at the end of December or when federal funding has been used up, and additional assistance to renters and homeowners as well. So there are a lot of different resources, but these are a little bit less defined. So here's a list of the resources, and we're not expecting you to write all these down, but just wanted to give you an overview. And since this will be on our social media, our YouTube, if you'd like to pause that screen at that time and jot down these websites for more information, you don't have to worry, like I said, about writing down those details on the slide. Here are additional resources. I'm just going to pause for a moment in case there's something that you really feel is necessary to jot down. But again, this will be available, so you don't have to worry about writing down all the resources on this slide. Now, the priority was to get through COVID-19 related resources at the top of the hour, and we're going to finish up the hour. We're going to finish up the presentation in the hour and leave time for questions. But now I want to get into a lot of the resources that have been around and will be around. So even if you're a little bit nervous about some of these provisions going away, or if they don't quite meet your needs, then I want to make sure that we understand what is out there, what has been especially helpful for those affected by cancer. So as we saw in the previous slides, COVID-19 protections won't last forever. Let's talk about the first step in preventing or minimizing financial toxicity is to address the practical financial concerns and having an understanding how to use health insurance. I'll talk about health insurance options and options for healthcare if you can't get insurance, and I'll go over information on insurance appeals. Again, this is going to be a quick overview, and even though we look to our doctors and healthcare providers to know everything they need to know about our health and make informed decisions about our care, they're not necessarily the ones responsible for making sure that the care that they recommend is covered by your insurance plan. It is the patient's responsibility to understand their own insurance coverage. And I do not underestimate the importance and difficulty at times of understanding one's insurance coverage. It is not extremely clear cut. And so that's why I want to emphasize that having an understanding of what's covered and what cost sharing is required can help a person plan ahead for their finances and avoid unforeseen costs. So to find out information about your policy, your summary plan description or evidence of coverage description usually can be found online on your plan's website. Contact your human resources department, get a copy of your plan, and get familiar with that policy. You should become familiar with your copay, deductible, co-insurance responsibilities, and also be aware of services that might require prior authorization. Additionally, it's important for you to understand your insurance network and whether there's reimbursement for out-of-network services. Always contact the provider directly, meaning call up your doctor to confirm whether the provider accepts your insurance. Even if a provider is covered by insurance, it may be difficult to predict exactly what your out-of-pocket costs will be given your deductible, copay, and co-insurance responsibilities. Of course, having insurance in the first place is one huge step towards addressing practical financial concerns. One or more of the options may be available for you. I won't go into all the options about all the possible available ones, but suffice it to say, you should be aware of your insurance options. We have additional resources available on our website. The first one, employer-sponsored or COBRA, may be an option if you're leaving your job or have lost your job. This option can be expensive, but can help maintain coverage after employment. An alternative and potentially less expensive option would be to purchase a new plan through the state marketplace. Some states have their own private marketplace while others use healthcare.gov. And actually next month, I will be doing a presentation. You can find that information and sign up for free on our website about health insurance, open enrollment. So if this part is especially useful and relevant for you, and it really, even if you're happy with your insurance, I think it's always an opportunity during open enrollment to just check in, review your plan. Year by year, your needs may change. So it's a great opportunity to just check in, and that presentation we do every year. So just want to make sure that you're aware of that and to know that next month we have you covered, no pun intended. You can check out our webinar about health insurance and open enrollment. So it might be tempting to buy the cheapest plan, one with the lowest monthly cost, but some of those plans with the lower premiums may end up costing you more in the long run. That's if they have higher deductibles or higher out-of-pocket costs. So when you enter in your income on the website, you'll learn whether there are tax credits to help you lower the cost of your insurance premiums each month. The same is true for short-term health plans. They may be cheaper, but they likely don't provide the coverage that someone would need if they get diagnosed with cancer. Medicaid, you might have heard that term before. It is a health insurance program run by the states. Eligibility is traditionally based on low income, low assets, and disability. With Medicaid expansion, many states have expanded eligibility by having only an income-based requirement. Medicare, it's available to people who are turning 65 or those who have been eligible for SSDI, which stands for Social Security Disability Insurance, for 24 months. Now, I want to also make sure that you understand I'm going over a lot of information. Don't feel guilty if you're not remembering 100% of it. Just you can feel good that you're coming away with more information than you had at the start of this hour, which is a really good use of your time, I think. So you could feel good and just try to absorb the big picture and some of the resources, because you can always do a deeper dive on those resources if you feel like they might be helpful for you. If you cannot get health insurance otherwise, here's some other options. Private health insurance. Although this can be an expensive option, anyone can purchase private health coverage as long as they do so directly from an insurance company or through an insurance broker. Some people are not eligible to purchase through the marketplace due to immigration status or Medicare/Medicaid eligibility. Hill-Burton, that's a law that gave hospitals and other health facilities money for construction and modernization. In return, the facilities that received these funds agreed to provide a reasonable volume of service to people unable to pay. The program did stop providing funds in the late 1990s, but certain healthcare facilities are still obligated to provide free or reduced cost care. You can call the national hotline listed on your screen to get a list of obligated facilities. Charity care or hospital-based financial assistance means that hospitals have free or low-cost care available to low-income patients. We suggest speaking with a social worker, financial navigator, or the patient services at your local hospital department to determine which options may be available. You often have to provide information about your income and other assets. Even if you are insured but are concerned about outstanding medical bills or the best ways to use your insurance coverage, there are tips that can be helpful. Here are a couple of things to keep in mind to make sure you get the most out of your insurance policy. First of all, check with your insurance policy to see if they offer a case manager. If your plan or hospital does not offer case managers or patient navigators, ask to speak with the same person each time you call if possible. Just simply ask for their name. You can maybe get their extension number, and also mind the fact that they might be in a different time zone. So you may want to get a sense of what time zone, what hours they're in the office, or what days. Of course, if the person has not been helpful, you don't necessarily need to speak with them again. You may want to take your chances and get someone better. But positive rapport can go a long way, as the insurance employees may be willing to spend time finding ways to reduce costs. Now, they should be taking down notes, and you should be taking down notes as well after your conversation. But if there's someone that you feel is listening to you and taking that extra step, it's a good idea to stay and speak with them again. If the hospital case manager makes sure that your insurance, it's they're the ones that make sure that your health insurance company understands what's happening during a hospitalization. And if you want to contact your provider, your doctor, and communicate with them about the cost of your treatment, it's understandable that that might be an uncomfortable conversation to have. But the bottom line is, if you can't afford the treatments and prescriptions your provider is recommending, or you aren't adhering to the schedule or dosing because of costs, that becomes a medical issue and your provider needs to know. They can't help or recommend less expensive options if they don't know your situation. We suggest keeping dates, times, and extension numbers in addition to writing down names. Also, if you're required to get a pre-authorization, request it sent by mail or email and keep it. The irony is that despite the fact that it says pre-authorization, sometimes a person only finds out after the fact that they needed a pre-authorization. So it's a good idea to ask that information in advance, if possible, if you need a pre-authorization, so you can keep in mind and get those documents or get the doctor sign off in advance as soon as possible. So if a person does not get a pre-authorization beforehand, it can be that much difficult or even not possible to get that coverage after. Open all mail, even if it seems daunting. Review all bills. Compare them with your explanation of benefits or EOB. Insurance EOBs explain what you owe the provider. Mistakes happen. Now let's talk about prescription drug coverage. We talked about coverage of appointments and services, but prescription drug copays are especially expensive these days, especially for new therapies that have no generic equivalent. Someone with cancer may not take their medicine as directed so they can save money on copayments. We don't want to think about that possibility, and it certainly is something that you should talk about with your doctor, but people often encounter issues with medications not being covered. I just want to quickly introduce some common issues with coverage of medication. Even though it seems that a person might feel very alone in this, unfortunately, these are quite common. Some reasons medication might be really expensive or not covered. It can be difficult to get off-label drugs covered by insurance. Most insurance policies have what's called a prescription drug formulary. That's a word that means essentially a list of medications covered by your insurance company. They could just say that, but they call that formulary. And it lists the coverage at different percentages, usually tiered low to high. For example, a generic drug may be in a lower tier, meaning it comes out as a cheaper cost to you, while certain brand name medications are at a higher tier, meaning that the insurance pays less and it costs more out of pocket for you. You can ask your insurance company, or if you have Medicare Part D prescription coverage, for a copy of your insurance formulary. Patients or providers can petition for an exemption, which is a sort of informal insurance appeal. If you have issues getting a certain medication paid for, you also may be able to use discount pharmacies or coupons to cover certain medications, or if the issue is your insurance, they may be able to help you figure out what to do next. Sometimes the cash price for a generic medication can be even cheaper than a copay through insurance. So it can be worth asking what the cash price is for some medications. Sometimes it also makes sense to do mail order, which may or may not save you money on copays, but could save time or money spent to get to and from the pharmacy. This is especially relevant during COVID-19, where someone may not want to make that extra step to the pharmacy due to safety or medical concerns. Your insurance might have to do step therapy. That means you may have to try less expensive medications first and demonstrate they don't work before your insurance will pay for a medication your doctor originally requested. Or if you need a medication covered for which your insurance denies coverage, your doctor can help you appeal with the insurance company to try to get it covered as medically necessary. The CLRC website has insurance appeals information as well as a fact sheet on accessing prescription medications. I talked about how I'm going to talk about health insurance appeals, and now we've gotten to that point. Another way to minimize financial toxicity is to make sure your health insurance plan is covering the costs that they're supposed to, those that are medically necessary and covered under your plan. Private insurance companies have different procedures for appeals, and it varies by state. The process for completing the appeal should be found in the denial letter sent by the insurance company and also contain information about strict timelines that must be followed for a successful appeal. So just because you get a letter that says denied and you want to throw away that letter or put it away for some time, at least take a look at the timelines because they are strict. And if you decide to appeal, you want to at least make sure that you comply with those timelines. That's the minimum. When you go through the appeals process with the insurance company, this is called an internal appeal. If you're unsuccessful with an insurance company's internal appeal process and they still deny coverage, it doesn't have to end there. You can request an external review through the state with a third party, and that decision is usually binding. This is called an independent medical review or external appeal because someone else gets a say in the appeal. Typically, you have to go through the insurance company first unless the issue is urgent. Often, medical teams are unaware of insurance difficulties that patients face. Your medical team may be able to get you to help you appeal or get you to go another route so you don't suffer so much out-of-pocket expense. Just another reason to get familiar with your insurance policy. If you don't know what's supposed to be covered, how will you know to raise an issue if your insurance company doesn't pay what it's supposed to? Now, if you have Medicaid or Medicare, the procedures are different, so I won't go into detail about that here, but you can contact your state Medicaid agency for appeal information. If you have Medicare, your local SHIP office is a good resource. Now let's talk about how many of the financial concerns of people with cancer are related to a combination of high medical expenses that we've been addressing and loss of income. Some would argue that loss of income is the most important practical financial concern. So I want to quickly touch on the job and income protection. Having adequate healthcare coverage or focusing on reducing healthcare costs simply isn't enough to address these concerns. And that's why I wanted to start off this presentation by talking about COVID-related protections. As you were able to see, a lot of them had to do with job-related protections because after all, people's income is relevant to whether they're able to pay for treatment, how they're able to pay for other expenses. So this is actually the shortest section of this presentation, but we can actually do an entire presentation just on this issue. So we have a lot more resources on this topic on our website and YouTube page. Cancer-related financial toxicity, it often springs from people losing their income due to needing to take time off work, either for themselves or a loved one dealing with cancer. There's medical appointments to get to, physical recovery from treatment, and fatigue from having gone through medical treatment. Unfortunately, people sometimes lose their jobs due to discrimination or exhaust their medical leave. So it's important to understand there are laws that protect people in the workplace. And even if your job is protected, that doesn't mean your time off will be paid. So let's get into it. Job protection. Insurance and income are important. So I want to talk about some laws that provide protection in the workplace. I'll discuss income replacement in a little bit, but it's important to know job protection and income replacement are not the same. When someone says they're out on disability, it's not clear whether that means they're on disability leave, receiving disability benefits, or both. A lot of people with cancer don't realize that they are potentially protected by disability anti-discrimination laws. In a lot of cases, maintaining employment is the most important thing to prevent financial toxicity. So let's go over it. I referenced FMLA a little bit earlier in the presentation when I was talking about COVID-19 protections. FMLA, or the Family Medical Leave Act, is the law that provides people with some job and benefit protected medical leave for themselves or a family member. So even if the COVID-19 protections were to expire, this has been on the books. If you work for a public agency or a private employer of 50 or more employees within a 75-mile radius, you could be eligible to take up to 12 weeks of job protected medical leave and get your same job and benefits when you go back to work. Some states have a similar law, and some employers provide medical leave similar to FMLA. Again, this is just a 30-second overview of a very complex law. And it's important to understand that the Family Medical Leave Act applies across the country. It's not just for people in California, for example. States may have their own additional protections, but this is something that applies across the country. So even if you're listening from the East Coast or some other place, this is a nationwide law. Another nationwide law is the American with Disabilities Act, also called ADA. It's a federal law that protects people with disabilities from discrimination at a public employer or a private employer with 15 or more employees. Now, this is probably one of the most surprising parts. Cancer can be considered a disability under the ADA definition, so you may be eligible for a reasonable accommodation in the workplace, including physical adjustments to the workplace or adjustment in company policies. The CLRC has publications on its website dealing with protections in the workplace and how to speak to an employer about a cancer diagnosis. It's important to understand your rights early on. Even if at this time you don't have any issues with your employer, which I would be happy to hear that you do not, it's important to know what rights you do have. The CLRC website has a repository of information on employment law, including webinars and handouts. Again, maintaining employment when at all possible is imperative in avoiding financial concerns. So it might be helpful to ask your doctor to suggest accommodations that you might be able to use at work. The reason that your doctor might be especially helpful also because they might know your side effects or other issues. So, income replacement. Here are some options for income replacement if you're either out of work, on unpaid leave, or unemployed, unable to work. We often hear from patients and survivors who were unaware of their potential eligibility for these programs. So anything you can do to get informed about these programs may be helpful. The Social Security Administration offers 2 long-term disability programs in addition to providing retirement benefits. Social Security Disability Insurance, or SSDI, is based on work credits. In other words, you pay into this system, so you are essentially insured. You can log on to the Social Security Administration website at ssa.gov to view your eligibility. SSI, or Supplemental Security Income, is based on being low income and having limited resources. You have to qualify based on income and bank accounts and things you own. The definition of disability is the same for both. Essentially, you have to be unable to work for 12 months or more, or have a terminal illness. Cancer does not mean automatic approval in every instance, and the approval process can take months. Some states have their own short-term disability programs, but very few states provide income replacement for employees. Private disability insurance refers to a policy you bought on your own from a company or broker, or one you get through your work. Be sure to review the policy. The Affordable Care Act pre-existing condition protections do not apply to private disability insurance. That means if you don't have disability insurance and are diagnosed with cancer, you can be denied disability insurance or charged a lot more for your policy. So definitely read the fine print on those. So to prevent financial toxicity and address practical financial concerns, we should have insurance, understand how to use it, and understand that appeal rights exist. We should make sure that our income is protected and understand what disability benefits for which we may be eligible. And even if we've done all that, we can still be subject to debt or financial trouble. So what do we do then? That's what the rest of this presentation will focus on. If someone you know has cancer or another illness and is on the hook for medical bills, I'm going to go over some information that should provide some guidance. And at the end, hopefully we'll have time. I'll show you some websites and resources. So when the presentation is available later, you'll have all the contact information you need on this webinar. So review medical bills. We did discuss this a little bit, but what if your insurance has paid what it's going to pay? You get a huge medical bill. Where do you start? I won't go into detail about everything on this slide. The one important thing I want to point out is that many patients are unaware of is the ability to negotiate a medical bill. We frequently hear from patients who are unable to pay the full amount they owe a hospital or provider and have no idea that they may be able to pay a smaller lump sum or set up a payment plan. This is especially relevant now because during COVID-19, there may be opportunities and the ability to discuss with the company. If you think there's an issue, and contacting a creditor is the first step. This is becoming more and more common during this time because people may have additional medical expenses or have additional concerns about bills. When you get the billing department on the line, request that your bill be put on hold from collections and that your account status be changed to pending. Then request a line item or detailed bill, especially for hospital bills. Line item bills detail every single charge. Confirm that your insurance was billed. Sometimes providers send bills before the insurance payment is reflected. Credit reporting bureaus are required to wait 180 days before putting past due medical debt on a credit report so that patients can work on getting their bills paid. Make sure every single item on that bill was actually ordered by your physician in writing. If your doctor didn't order a test or procedure in writing, you can't be charged for it. Look for duplicate charges. Look for upcoding. This is when a provider bills for a more costly procedure than what was actually performed. Compare the codes in your medical records against your detailed bill. If it looks like the charges are valid and you can't pay it all now, you can set up a payment plan or try to negotiate a smaller lump sum. If you determine that there are charges you can dispute, write a medical dispute letter to mail, fax, or email. It's important to have it in writing, and if you send it by mail, send it certified if possible so you can confirm receipt. Write the letter as soon as possible. Of course, you'll want to put your account information, details on the charges you're disputing, date, time, facilities, physician name, code number, and a statement that explains why you're disputing certain charges. Attach any supporting documentation you have. It's important to make it as clear as possible and help those who are going to be looking at this bill to make a decision in your favor, and that means providing that information. So once you've disputed any errors, you can also make sure the hospital is being fair in its pricing. There are tools online you can use to see whether the prices you were charged for services are fair. If you find out that your bill was way out of line, you can use that insurance to get your fees lowered. So another option is, if warranted, is to file a complaint with the Department of Public Health or Insurance in your state if you're just not getting anywhere with the hospital. Some states have laws limiting how much hospitals can charge patients who pay for care on their own, self-pay patients, and other consumer protections for medical billing. If the task of reviewing a lengthy hospital bill seems impossible given your circumstances, you could consider talking to a medical billing advocate or attorney. But of course, that means that you might also get charged from that medical billing advocate. They may either charge an hourly fee or percentage of what they save you. So be aware of that. Additionally, some hospitals have financial navigators, so that can be beneficial as well. Now, I want to talk about balance billing. Some people think that if your health insurance pays your medical provider, that means the insurance company has paid the entire cost of care to your provider besides your copay insurance deductible. Not the case. If your provider accepts your insurance or accepts assignment from Medicare, that provider has agreed to be paid what the insurance will pay them and accept that payment as payment in full. When your insurance, whether private insurance, Medicare, or Medicaid, pays the provider, they're paying a contracted rate to the provider. For instance, the provider's service could typically be $500, but they agree to be paid $300 from your insurance. That's the contracted rate between your insurance and the provider, $300. If you visit any in-network provider and get services covered by your insurance plan, they have a contracted rate they agree to accept from your insurance, so you cannot be billed for the balance. In this example, the remaining $200. To bill you for the insurance would be violating the contract between the provider and the insurance company. If you go outside your insurance network or get care that isn't covered under your policy, then you can be held liable, because in those cases, the provider has not negotiated to accept a certain rate and is under no obligation, no contract. So it is not illegal if your provider is under no contract. If you run into this issue, you may be able to file a grievance with the insurance plan so they're on notice that their provider is violating their contract. Consider financing options carefully. Any family facing cancer is going to have some out-of-pocket costs. It can be hundreds or thousands of dollars. Providers are now offering ways of financing what you owe. Medical providers will often require you to demonstrate your ability to pay before agreeing to treat you. That's normal unless you're in need of immediate life-saving emergency treatment. Providers know most people don't have this kind of cash on hand, and they want to be sure they're going to be paid. Your facility may offer options like a medical credit card or private loan through a partner lender to patients seeking care. It's really important to do your research. Take a little bit of time or ask someone to go over the terms if you choose to finance a medical bill, so you have another set of eyes before you sign. If you don't understand it before you sign, what makes you think you're going to understand it after you sign? So don't sign onto a loan or card without researching. Some medical credit cards like Care Credit and some other companies offer 0 interest for 18 months or some terms like that. It may seem like a no-brainer, but consider your budget. Even at 0%, could you offer to pay off the whole balance in 18 months? That's important to think about, because after 18 months, the interest rate will go way up to something like 26% or so. And with that interest, it may become impossible to pay off that balance. If the hospital says they have a lender they've partnered with, find out what the hidden terms are there. As we're often warned, if it sounds too good to be true, it is. And it's okay to be skeptical when it comes to loans. So that is one piece of advice that you should carry with you no matter what the credit card company is in terms of medical care financing. Talk to your provider. If they're recommending something you can't afford and might need to take out a loan out in order to pay for, maybe they can offer an alternative treatment that is covered by your insurance, or maybe able to work with you on cost sharing. Fundraising. Because cancer is so expensive, people often need help and elect to fundraise. Even with insurance covering much of the medical burden, people may fundraise to help cover costs like being out of work or copays. Asking for help is a good idea, but if you get cash help from someone, use caution. If you're receiving government benefits like SSI or Medicaid or charitable health care through the hospital where you receive treatment, you should speak to someone familiar with the eligibility requirements for the program you are on to make sure your cash gifts do not disqualify you. Government programs have strict income requirements, and the cash you receive could disqualify you from these programs. So let's say a fundraiser is set up for someone who's on SSI or Medicaid, and even if it's a fundraiser that raises only a few $100s, depending on that patient's situation, if that money is transferred to the patient, it could put them over the income limit for these programs and jeopardize their benefits. So the value of SSI and Medicaid to that person is likely much higher than what a small GoFundMe fundraiser or some other kind of fundraiser could raise. So we just encourage people to exercise caution so no one has to worry about repaying benefits to the SSA or get concerned that their benefits will be terminated. So one option to help avoid jeopardizing benefits would be for someone else to use the funds raised to help pay directly for medical bills or other things that are not food or shelter for the patient. So just to keep in mind that as you consider different options. I mentioned at the beginning of the presentation that I would discuss about prioritizing expenses. Sometimes there's just simply not enough money to go around. If bills continue to come in or debt continues to rise, one thing that can help alleviate a bit of the burden, at least temporarily, is to prioritize the most important expenses. For example, if someone has debt that has been secured with collateral, such as a mortgage or car loan, it may be important to prioritize those expenses or risk repossession or foreclosure. I'm not an economist or knowledgeable in financial issues to advanced degree, but I want to just go over these basics. If you stop paying a car loan or mortgage, you risk losing your home or car. However, maybe you live somewhere with excellent public transportation or other transportation options, such as Uber, taxis. Maybe in that case, giving up a car isn't as big of a deal. Or maybe the household can get by with one car instead of multiple. Along the same lines, even if you do not own your home, it may be important to pay attention to due dates for other essential things like rent for an apartment. The reason I bring this up, I wanted to make sure to reference the resources that I mentioned at the earlier part of this presentation, because now during COVID, there are additional protections out there. However, those have either expired or are expiring. So I want to make sure to go over this information because after December, you may still need to prioritize expenses. And if those protections are not there anymore, then it's important to focus on what has been there and what will be there. We often hear from patients and survivors who are struggling with housing issues because they stopped paying their rent or mortgage when the medical bills started piling up. You may not normally think that a housing issue could be something that someone calls the CLRC about, but that does happen precisely because of that circumstance. We, of course, think of medical bills as necessities, but in a lot of circumstances, patients are still able to continue receiving care despite having large bills, and or may have a little more flexibility with respect to repayment timing and options compared to rent or mortgage payment, where a landlord or bank may not be as flexible. It's important to be able to pay co-pays when you go to the doctor, and you can be turned away if you cannot afford them. But if you risk losing your home or car, you may want to prioritize those payments over, for example, a credit card bill. Now, it is up to you to make the best decision for your circumstance. We're just giving you perspective. We're not telling you to avoid paying medical bills or to avoid paying some other kinds of bills. It's really just a way, if you're in a very dire situation, on how to start to think about approaching a solution. If you do end up owing a balance that you can't pay off, medical debt or otherwise, and it becomes delinquent, that is certainly not uncommon in this world of incredibly expensive medicine and when there are a lack of income replacement programs. The Federal Fair Debt Collection Practices Act protects consumers from harassing collection practices used by debt collectors, i.e. collection agencies or attorneys. A debt collector is different than a creditor. A creditor extends credit to individuals. That's the original person who extended you the services. That creditor will then contract with a debt collection agency or attorney or sell to debt buyers to collect past due debt. Although our original creditors are exempt from the federal rules, some states have their own laws regarding creditor behavior. Debt collectors are required to disclose that they are debt collectors and are required to send written notice about the debt. Debt collectors are not allowed to harass individuals, make false statements, or engage in unfair practices. If you learn that you owe money, ask the bill collector about it. Get a copy of your credit report. Ask the collector for more information. Get their name, address, and request information about the debt in writing. After all, they have your name. You can get their information. Make sure it's legit. There are so many scams these days where scammers get people on the phone and try to convince them to make an immediate payment over the phone, but this is not a good idea if you don't know who you're paying or why. There are also time limits for collecting a debt, called statutes of limitations, which vary from state to state. The statute of limitations for debt collection is the number of years during which a collector could sue you for the debt and enforce a judgment. When you get confirmation of the debt you owe, You may want to check about the statute of limitations, both for the debt collection and for credit reporting. Sometimes it doesn't make sense to pay a past due debt that's about to fall off your credit report. If you owe the money but cannot pay it, sometimes debt collectors will be sympathetic if you offer to pay a reduced amount, especially if the debt is older. You can try to negotiate. They may be more likely to reduce what you owe if you can pay it all off. If you think the number is wrong, file a dispute. There are online resources for disputing debts. I mentioned about medical billing, but there are many types of debt. This applies universally. Note, once your bill has been sent to a debt collector, it may have a larger impact on your credit score. It's usually better to try to negotiate and set up a payment plan with the hospital or provider directly instead of waiting to do so with a debt collector. Once it has been sent to collections, it's a negative mark on your credit. Now, we just have about 10 minutes left in the hour, so I want to make sure to just briefly go over some other information. And of course, you could reach out to the CLRC for more specific questions about your situation, and I'll leave some time for questions at the end. So sometimes we hear from callers who are concerned about their liability for the debts of someone else. In general, if someone dies and has amassed debt during their lifetime, the state would have to pay the debts before the heirs would receive any of the property. While a spouse is not always liable for the debts of the other spouse, there is something called doctrine of necessaries, which applies in most states, but not all, which does potentially make spouses liable for necessary expenses or debt, such as medical bills, utilities, rent, food, and clothing. Unfortunately, this means in a lot of circumstances that the widow or the widower is responsible for paying off the medical debt of their deceased spouse, same way a parent would be liable for the medical debt amassed by a minor child. Again, this does vary a bit from state to state. That being said, this liability generally does not pass to anyone else, next of kin, etc., unless someone else has explicitly agreed to be responsible for the medical bills. So just want to touch upon this briefly and give you that basic information. Now let's just touch upon very briefly the debt collection lawsuits. Okay, so what if you can't dispute and can't pay off a debt? Should you be worried about a lawsuit? It depends. Each state has a statute of limitations, I referred to that briefly a moment ago, or a time limit when a debt collector can sue you. So you might not need to worry about really old debt, but it's always a good idea to check with a lawyer first. If you're actually sued for past due debt, a lawyer might raise that as a defense to a lawsuit. You can also call the CLRC, or most state attorney general websites have consumer information about debt collection and statutes of limitations. So I just wanted to raise that. Hopefully you'll never get to that point. The next slide's also going to include something that hopefully you'll never have to deal with, but it's just helpful and empowering to have that basic information. Bankruptcy. Some people have no choice but to file bankruptcy. This might be the only option for some people who are moving from huge medical debt or a lawsuit judgment. Two types of bankruptcy, and both result in a discharge of debts, but they vary in how a person gets to that point. Just very briefly, a Chapter 7 bankruptcy is a liquidation bankruptcy where all your unsecured debts like medical bills, credit card judgments are discharged. If you make too much money or above the means test, you may qualify for Chapter 13. In a Chapter 13 bankruptcy, you make a plan to repay debts. It's a reorganization. You'll make payments to a trustee who will distribute those payments to your creditors. It's a good idea to talk to our bankruptcy attorney if you're considering this option so you fully understand the implications. So just to put that out there, student loans. This is something that there are additional protections based on COVID-19. So I just wanted to raise it here that there are student loans that might result that are not discharged in bankruptcy, but again, during COVID-19, there are additional protections for student loans. So please look into that if you do have student loans. Moving on to insurance resources, here are some places to get insurance information. Contact the CLRC if you want to ask about COBRA, marketplace insurance, Medicaid, insurance appeals. We have a comprehensive website with fact sheets, or ask a question for individual assistance, and then there are government websites for various programs. I'll just pause for a moment if you want to jot down something down immediately, but again, this will be available online. For more specific help on Medicare, here are some resources that can help with your individual questions. SHIP, which stands for State Health Insurance Assistance Program, is a great resource. Just pause for a moment here. Medical billing resources. These are the first resources related to fair debt collection practices I mentioned earlier in the presentation. I'm leaving you with a few medical billing resources here. We do not endorse these or any other companies. Just want to make that clear again. Here's another resource, the Patient Advocate Foundation, that can help you with case management for your health insurance issues. I know I haven't left a lot of time for you to jot down those websites. Again, they will be available after. Consumer debt protection resources. If there is a debt collector harassing you, or you're worried about a lawsuit or wage garnishments, check out this video from the FTC. Certain benefits are exempt from wage garnishment. Here's a bit more about that. To find a lawyer, contact the American Bar Association, Legal Aid, or lawhelp.org. Now let's recap today's presentation as we're wrapping up. Thank you so much for staying with me throughout this hour. I know we've covered a lot of ground. As you know, we discussed COVID-19 related resources at the top of the hour. Want to make sure to get those underway. This was a condensed introduction to a lot of money related topics. All of these topics are things you should find information about on our website. Some of these topics are things we have fact sheets or even entire webinars. Fill out an intake for customized information. We're limited to 1 hour webinars, so this had to be quick. And even this is way more than the average human attention span. So thanks so much for hanging in there. Here's a recap slide of the topics we went over today. And thank you so much for your time. I'm going to pause for a moment as we have just a few minutes left. I'm going to stop the recording